All right, so we're going to talk about the NR7 strategy today, ladies and gentlemen. And we're going to be talking about finding the breakout trades before the move, and specifically for those of you using funded accounts. But first, this presentation is for educational purposes only and does not constitute financial advice. Trading involves risk, significant risk, and is not suitable for all investors. The decisions you make and the actions you take in trading are solely your responsibility. Past performance is not indicative of future results. Understand and acknowledge these risks before participating. So what I'm going to do today, ladies and gentlemen, is I want to talk to you about a structured, rule-based like trading strategy, trading system that removes emotional decision-making from the process, and why that is so important and why specifically that changes everything. And so we're going to get into the guts of this strategy here. And I'm curious, just if any of you have heard of this strategy before, if you're here to learn it for the first time, but if you've heard of the NR7 strategy, type a 7 in the chat pane. I'm curious how many of you, it's not something our team invented. It's been out there for years. It was one of the very first strategies I personally learned maybe 10, 11 years ago. Curious how many have heard of it. Okay, so we got a few. Okay, awesome. So what we're going to talk about, ladies and gentlemen, is the NR7. And you're like, what the heck does that mean? Is that a code word? Is that like a fighter jet? Is that some abbreviation? And the answer is it means one thing and only one thing, which is narrow range. 7 and going back 7 candles. So obviously the 7 denotes the 7 candles. And so what we're going to do is we're going to talk a little bit about what in the world is range. What is range? So if I was to take a candlestick, and let me draw a candlestick real quick for you guys. If I was to take a candlestick, it can be any shape, any size, any color. And I was to say, you know what, this is the high and this is the low of this candlestick. And let's just pretend this is any chart, any candlestick chart for any asset. It could be Tesla. It could be M&Q. It could be almost anything, an option chart. It could be anything. But on this candlestick, let's pretend that the high is $18 and let's just say the low is $15. Okay. So 18 is my high, 15 is my low. So the way that this range, like what is this range? It basically just means the high minus the low, right? So in this size candle, you can see that the range is essentially $3. It is not essentially, but it is basically $3. So this is like a $3 candle. This made a $3 move from the high to the low, right? From 18 down to $15. Okay. Now let me show you another example of a much bigger candle, something like this. And let's just say, I don't know, the high is $25. Okay. And the low is 11. Okay. So what is my range, my high minus my low on this? Well, the high minus the low is my range. My 25 minus my 11 is, and if every one of you said $14, you would be absolutely correct. So if I have $3, this candle here represents $3 and this one represents a $14 move, which one is my narrowest or shortest? And the answer would be this one, right? So that's what we're going to look at. We're going to look at the structure of how this works. I got some decent examples queued up for you guys, and we're going to take a look at how this works. Now, remember, in this example, we're only looking at 2 candles, and our formula requires 7, right? So obviously you need a minimum of 7 to know if 7 is the deal. So here's what we're going to do. We're going to look at the narrow range, and I actually took some screenshots of some stock charts. Actually, I believe this was M&Q. This is a futures chart. And I want to play out for you guys how this works, okay? And why on this chart, why certain candles pop and stand out more than others. And some of you guys who might be students of the candlestick, you'll notice that some of these here are a little bit larger. Some of these here are a little bit smaller, right? That's the nature of trading. You have some high and low volumes across the bottom. And what I want you guys to do is, I want you to think about this. We're looking for a narrow range, and we're going to essentially wait, right? We're going to wait. So what we're going to do is we're going to say, okay, this candle right here if I was to count backwards, remember it's narrow range 7. If I was to count back 7 candles, I want to make sure that it is the narrowest. And what we're going to do is we're going to look at these candles here that I've circled. And what you'll see is that each one of these, if I was to count back 7, 6, 5, 4, 3, 2, and 1, when this candle was the current candle, you will agree probably that very first one, if I was to scroll back a little bit, that was the narrowest going back 7 candles. Can you guys agree? Now, it doesn't mean there's not any other narrower candles on the chart, but what it means is the current candle, and it has to have closed, right? So this candle has to close, and essentially what would happen is my next candle would start, taking shape, and you guys have probably watched this charts like this move live, and they kind of take shape. When a candle closes, the next candle starts moving, right? Starting to forming, right? So in this case, this is my narrow range, okay? And essentially what happens is I want to take that and I want to say, okay, this is some contraction, right? Like things are going from very, very large candles to smaller, and there might be a little bit of a turning point. Now, the thing that I really like about this candle is you guys can see it's already made a pretty decent move, had a whole bunch of bullish or green, or I prefer black and white candles, but a whole bunch of green bullish candles in a row. So it's already made a little bit of a move, taking a little breather, kind of ready for the next move, or is it waiting to break and kind of roll over, right? Now, you guys have probably seen this, but essentially what I want to do is I want to point out just the candles here that I've circled, and these candles represent the narrowest range, okay? And what happens when you see a narrow range, you're like, okay, Matt, I get it. Now what? The answer is, imagine you have an entry here, a stop down here, and you put a profit target up here, maybe 2 to 3x of what your risk is, okay? We'll talk about risk a little bit more here in a few minutes, but I want you guys to think about this. What happens? The question is this going to go higher? Is it going to roll over? I personally prefer if something were to roll over because it's already taken a pretty big move. You guys agree? Yes, it had a little bit of rollover and some, a little bit of rest and a little bit of pullback. But imagine being in a trade down here, riding this all the way higher, and you're like, yeah, let's go to the moon, right? You're sitting on some nice profits, assuming you have more than one share or more than one contract. You should be sitting on some pretty decent profits, right? And then what happens when the rubber band is stretched to its limit? It's going to contract, right? And so what this narrow range is, are essentially these narrow candles, and it's not as complex as trying to do the math off the top of your head. What's the narrowest, like we actually have something I'm going to show you in a sec that makes all this way, way, way easier. Okay. But I want you guys to see this again, going back, and this is the one I like the most. Why? Because it's rolling over. It's kind of very much extended, right? And I'm like, oh, it's already made a big move. Some kind of a pullback is pretty much imminent. These pullbacks continued higher, right? So some kind of a pullback is imminent. Plus, always think of the, kind of the rule of 3. Anyways, so in this case, our entry is here, our stop loss is up here, and our green take profit is here. Now, what I want to do is I want to talk to you guys about fixed risk. Some of you guys may always trade a certain number, like 1,000 shares or 10,000 shares or 5 contracts or 2 contracts or 1 contract. And most of you probably have what is known as fixed position sizing. What we prefer is fixed risk. What does that mean? That means if I'm going to risk $100, so if I get in a trade here and price action moves against me, I'm going to lose $100 on a losing trade, right? However, if my price target when I win is 2x of that, that means when I lose, I'm going to lose 100. When I win, I'm going to win $200. And you guys can see in this example, we kind of get in, and I just realized when I adjusted this, my lines got adjusted a little bit, but essentially it rolled over, right? So that is the idea with this narrow range. And what I want to do is I want to show you guys this number or this system, this indicator that we built Actually, it's been a little bit, but we have an indicator for TradingView. How many of you guys use TradingView as your main charting platform? So I want to give you something today. It's literally an indicator. If you go on TradingView and search for NR7 indicator, you will see that yours truly built something years ago and just give it away for free. Okay. So imagine instead of trying to eyeball, obviously I highlighted these candles for you, but instead of trying to eyeball them, imagine if you had something even better. You actually had like sevens as an indicator above the actual candles. Would that be helpful for you guys? So that it points it out automatically. It does the math. It says, okay, this is or is not the smallest going back 7 candles. Would that be helpful for you guys? So what I'm going to do is I'll go ahead and put this link in our chat pane real quick. And I'm going to share that with you guys. Let me know if you guys can get this link. Again, it is on TradingView. Okay. So the idea here is that the narrow range kind of is, you can see these candles here are significantly bigger, and then they start getting smaller around the time they're going to maybe U-turn. That's the theory. That's the idea, the premise behind this exact strategy. Okay. So what we're going to do is we're going to take a look at some rules and like, what are the fundamentals, some like specifics. Okay. So number one is that NR7, that 7 denotes a look back, what we call a look back, basically meaning how many candles going back do I need? I need 7 candles, right? So obviously, what does that also imply? That also implied you need to wait for 7 candles to have been created, right? The next thing is the most recent closed candle the shortest? Now, why does it matter that the candle has to close? Why does that matter? Does anyone know? Any thoughts on why a candle has to be closed? Why does that matter? Why can't you just play the one that's currently forming? And the reason is most candles start out like a little line, half a second into the candle, right? You got to let it decide if it's going to be a candle that looks something like this, or if it's going to be a big candle that looks something like this. And it just started right there. Okay. Started right there. So the idea again is to look for the 7 candles backwards, look back of 7 candles. So I like to count down 7, 6, 5, 4, 3, 2, 1. And that's supposed to be a 4, 3, 2, and 1. And is this current candle the one that's closed? So there obviously will be another candle forming over here we're going to ignore. Is the most recent closed candle the shortest? So sometimes you'll see, and it'll appear that some are almost identical, right? And in that case, let's say you have 2 candles that are identical size. The answer is no, it is not the shortest. It's tied for the shortest, right? Yeah. So if it is, we're going to play the break higher or lower, like some of you guys may have been here for our opening range breakout training. And the idea here is, of course, you're looking for what happens after you've identified this candle. So let's go ahead and jump in and let's take a look at an example. Again, we're not predicting, we are reacting, right? So we're looking at what has happened and making some decisions about, okay, we're primed and teed up ready for what happens next. Okay. So let's take a look at a long example. This is actually, we have automated technology that does this for us. And you'll see this actually is one of our bots, and it took the take profit, and you'll see that it got in right here. And I think this was MES, if I'm not mistaken, wherever this screenshot came from. It got in. Here's our 7. You guys can see the 7 again, high and low. And you're like, well, Matt, this candle right here looks to be a 7. Yes, but we didn't go back 7 candles. Like this was the opening kind of salvo, so to speak. And we have some start times that we want to ignore, kind of the low volume times, because the low volume, you're going to get chopped up, right? During low volume is kind of like your dance partner. You want to be on the dance floor all by yourself. You want other people to kind of hide how terrible you dance, right? Like you don't be out there all by yourself, right? So again, we have technology that says we only want to start after a certain time so we can kind of ignore kind of those low volume times. Okay. So it's not every single one, it's certain candles within certain time frames. So you'll see here our 7 in our technology always puts a dot above the above what we call the signal candle. It's like, which candle are we looking at? Which candle are we playing? And you'll see that it does break above, right? Breaks above. So we're going to get in long, and you'll see this red line's a little bit lower than normally. Normally we put a red line just below the low, not at the exact nanosecond, exact spot, but below the low a little bit with some padding, some wiggle room, right? So I kind of stretched this out to fit it on my screen, so it kind of got a little bit distorted. But ultimately, we get in here, stop down here, and then in this case, it looks like a 1, 2, probably 3R kind of trade based on the original, right? The original size. So from here to here, let's assume we're risking $100, right? And let's say that we get in, we're triggered that nanosecond, we break above, okay? And then what happens? It reverses on us. It doesn't close down there, it just reverses on us. And you'll see the movement of the candle actually then goes higher, right? So it's like, oh my gosh, we're risking $100. We might be down $60 at this point, right? And you're panicking and you're using some obscenities with my name in the sentence. And then you go back to being break even at 0. And now you're up about $40, $50, right? You're up maybe $50, okay? And then guess what? Boom. Now we're up to $300. Now, if you say, Matt, how did it know to exit right there? Well, we have some rules of thumb, usually 2 to 3R. For every $1 of risk, we want $2 to $3 of reward, right? Now, even if you have a very low win rate, I'm not saying we do, but I'm just saying hypothetically, even with a low win rate, you are able to be profitable if you're risking $1 to make 2 or $1 to make $3, right? Does that make sense? So this is the rules that kind of come through this that we can replay here is we're going to wait 7 candles. Obviously, you can't compare 7 candles if there's only 3 that you're looking at. So you have to wait for those 7 candles if you're going to look back 7. We're going to use that 7 indicator. So we're looking for that on our chart as our signal candle. And then we're going to wait for a break above or a break below. Now, if you're using any kind of a traditional broker, there is something called an OCO, or a order cancels order, where you can basically put in, once you know the high and the low of the closed candle, you can put in an order that says, if I go higher, I want to be long. If I go lower, I want to be short. There's actual ways to automate this. We'll talk about that in a little bit later. But at the end of the day, you're using an order. Once you're in, you're in. Now, even if you're manually, if let's say you missed the move and price action is up here, you'll notice if you put your order in, it actually comes back to touch our entry and before continuing higher, right? So don't chase it. Don't chase the move. If you feel like you missed it, let the trade come to you, right? Just like fishing, let it come to you. Don't chase it, okay? And in this case, again, we broke above, meaning the second candle came above and we went higher, okay? The stop was placed below the low. So our stop below the low, again, of our signal candle. This candle right here, below the low of that. And then what happened? How did it play out? In this case, we hit our 3R target. Now, Matt, do you decide whether you want 2 or 3R ahead of time? Or do you do that on the fly? I highly recommend you figure that out before you get into the trade. Okay. Now, some of you might say, oh, Matt, why don't I always just go for 3R? Right. Well, that's a great question. But what happens if 3R is just out of reach, where price action doesn't quite go up to 3R, goes up to 2.8 and then rolls over and then goes back to like a 1R, and you panic and you take a lot, or you sell early, right? So I don't remember what happened on this screen. We look at so many charts every day. I don't remember if it rolled over, went lower. I don't remember what happened. That's not the point. The point here is, again, look for our 7 or our signal candle. And you guys can agree this, going back 7 candles, 7, 6, 5, 4, 3, 2, and 1. You guys agree that that number 7 candle at that moment in time, everything to the left, You guys agree that that was the narrowest range? Yes or no? Was that the narrowest range? Put a Y or N in the chat. Yes or no, was that the narrowest range? If it was, we're going to execute our strategy. Okay? So let's take a look at our next example. Our next example is the same thing in reverse. This is a short trade. And again, some of our lines got a little bit mixed up or messed up, but our entry here, our 7, wait for a lower kind of a rollover, right? Price, in this case, same scenario where we want to wait for 1, 2, 3R, get into the trade, wait for a lower move, 1, 2, 3R, and kind of exited right over right here. Yeah. So the idea, same thing, same rules, but in reverse. When to wait 7 candles. You guys probably agree that this candle here is our smallest candle, and we're going to wait 7 candles. We're going to use that 7 as the signal candle. We're going to wait for a break below, meaning if it goes lower, we're going to wait for a break below, which automatically means what? We're going shorter. We're waiting for a lower move, right? We're picking a direction. And then again, our stop is in this time above the high. And then what we're doing is we're waiting for it to hit our target. Does that make sense? So again, in this case, it's the same thing in reverse, but the question you guys probably have is, how do I know which direction it's going to go, right? So Chloe, if you're asking about 1H candles or another time frame, it actually depends. Depends on what you're trading. We actually have some stats, and we'll talk about that in a minute. But ultimately, you can use an OCO or a bracket order. Again, if this is your signal candle, what happens next? You can literally set this up as a long or short order. Or, sorry, you can set it up as both. Whichever one triggers is going to automatically do the opposite. So for example, if it breaks lower, meaning the second candle maybe looks something like this, we're going to have a short bearish bias, and our short entry, we're going to be in the trade, and then our long order is going to automatically get canceled, right? And then what it's going to do is it's going to set up our our stop loss in a short example would be up here. This would be our entry, and then our take profit would be lower, right down here. Now, most of you are probably thinking, okay, how do you know, like, when do you put in the stop loss? Like, how does all that happen? And really, it's if you've been trading any period of time, especially day trading on intraday kind of time frame, you've probably noticed, if you've done this you have more than 100 trades under your belt, things can move violently quick against you. So you don't want to have like I'll throw out a stop whenever I feel the pain, because trust me, it can go from bad to terrible very, very, very quickly. And one of my very first trades I ever did was I was short on Amazon, and I was down $1,500. Like, Matt, welcome to trading. $1,500, and I didn't want to take a stop. I don't want to take my loss. So I'm like, I'm going to wait till it turns around. Well, ladies and gentlemen, I paid some stupid tax, like a lot. So I didn't want to take your boy Matt did not want to take a $1,500 loss. So instead, I had to take a $6,500 loss. As you guys probably can understand, that is a more than 4x plus pain, right? I don't want to take the loss. So yeah. So Nasef, thanks for joining us. Yeah. We're rocking. Yep. So in this case, what we're going to do is we're going to do the opposite. In this case, is if our long entry is executed, we break above. So basically, if the next candle, closes or looks something like this, then our long entry, our long order is going to be executed, and our short order is going to be kind of closed. And what that would look like this would be our entry here. Our take profit would be up here, and then our stop loss would be kind of down a little bit of padding down here, right? That's what I like. I don't like to. Someone's like, I got to put it right at the exact penny. Trust me, you don't want to put it at the exact penny. Just trust me on this. Don't do that. Give it some wiggle room, okay? Is this making sense? So again, the idea here is, just to do a quick recap, is if we were to look at our examples that we kind of put out here, let me go back to this real quick. So our narrow range, again, 7 candles. And instead of these, if we had 7s and that would make life easier. Again, the trading view link is in chat. Again, entry here, stop here, price target up here. And you usually want 2 to 3x, right? So that means if our signal candle is this size, right, we get in here, stop down here, that means we want 2x this size to be our take profit, right? And then right here's our entry where we're getting in, right? Again, imagine this is like an inch. We want our take profit to be 2 inches. If it's half an inch, we want our take profit to be 2 times that half inch in size, okay? And again, this is fairly simple to do, especially in Identify, especially once you have the indicator on your chart, especially on TradingView. You'll notice that that was created, I think I created that in 2018. So in case you guys think that this is a new strategy, it's been around a while. And like I said, it's one of the very first strategies that I learned years ago. Okay. So again, that is what we're going to do is we're going to jump into these examples real quick. And there we go. There we go. Okay. So here is where most people get stuck. How many of you guys feel, go ahead and type a 1 in the chat pane. How many of you guys feel you can follow this strategy? How many of you guys feel like, okay, yeah, I get it. I could probably do this. How many of you guys feel you can do this? So one person. The rest, is this on? What about the rest of you? Come on. How many of you guys feel like this strategy is doable? Like you can execute this, even if you do it manually, right? How many of you guys feel you can do it? Well, the hard part isn't actually the strategy, right? It's the discipline of being consistent over time. Now imagine if you sometimes do it one way, sometimes do it a different way, maybe sometimes take the wrong signal or go the wrong direction or put the order in wrong. Do you think you'll find success? And the answer is probably not. You're probably going to find some headaches and some Tylenol at the end of the day waiting for you, right? Because the strategy isn't hard. The discipline is being patient. That's the hard part, right? That is the challenging part. Now, one of the other things people do is if they take a loss, let's say it just doesn't work. It's not going to work every 100% of the time. But let's say that it does. What if you say, you know what, Matt, I'm going to triple my risk because I need to make up for my last loss. And I'm going to try to outrun my loss. That's another thing that we see happen, changing your risk. So again, we recommend anywhere from funded accounts, depending on what size you have, what size funded account, anywhere from 100 to 250 per trade of risk. That does not mean you're trying to buy M&Q with $100 spending power. It just means risk, right? You're going to risk that amount per trade, right? So what that means is if you have a $50,000 account and you're going to risk $100, once you get to $49,900 balance, you're out, right? You took $100, your account went down by $100, okay? So we'll talk more about that here in just a minute. The other thing is not following the strategy. Like, oh, you know what? I've taken a loss, so I'm going to just go do my own thing. And then, of course, most fund accounts have these things called daily loss limits. Sometimes they call them DDLs or DLLs. And it's basically how much you're allowed to lose in your account in a single day. Now, again, this is super, super important. Why? Because we're talking about funded accounts, right? If you blow up a funded account, most of these don't have free resets anymore. You have to start all over, including Apex, right? If you blow it up or violate one of the rules, you have to start over, okay? So the question is, who the heck am I? And my name is Matt DeLong, and I've been a stock and options trader for 10 years. I've been working with automation for 8. I was the former CTO of Real Life Trading for 4 years, and I've been a speaker at the Money Show. I was in Vegas last month. I'll be in Dallas next month in May. So I've been around a little bit, and I've seen a lot of what doesn't work, and that's actually my secret superpower. I'm very good at what doesn't work, and I can figure that out really quickly. But the catch is I can figure out what not to do first, and then I can eventually figure out what to do. And that's what I hope to share with you guys today. Okay. Now, the thing that we like to say about funded accounts is that they are a good place to make cheap mistakes, right? Imagine having your very first trading account, losing $6,500 in your very first week on one trade. How many of you guys no matter how big your account was, would say, oh, this is awesome. This is amazing. No one. And I'm not talking about hypothetically. I'm talking about an actual real example of what's happened to me, all the things I've learned, hopefully, learn from my mistakes. Okay. And so the idea here with a funded account is that you're able to take an account like a $50,000 account, and you have to grow it a certain amount. So in this case, let's say that most of these accounts that are $50,000, most of them have a goal or a profit target of $3,000, which means 50K has to go up to 53, right? That is your goal. Once you hit that, boom, you get what's called a PA account, or some call them, Lucid calls the LTF, Lucid Trading Funded Account, right? So there are a couple different names for them. Pretty much means the same thing. So the idea is you grow at 3,000, but there's a couple catches, okay? The catch, the gotcha, is you can't lose more than $2,000 in this case, right? So basically 50 has to go to 53, but without going down 2K. So you can't go down to 48, right? And as you make profit, so when you get up to 51, 52, 53, that $2,000 is like a trailing number that kind of inches its way up. So as your profits grow, that $2,000 limit grows. So you can't, boom, kind of cross that threshold. Okay. So the idea here is it's a pretty decent place to start. And right before this webinar, actually, jumped online and we looked at, and I'll show you that in a second, but we looked at what are the actual literal examples here for like a funded account. And I personally like the 50K accounts. They're usually a few dollars more than the 25K. If you can imagine, like double the buying power for a little bit more, a few more dollars. It's what I feel is the best value, right? The best value for your money. Now, there are bigger accounts. You can go up to $150K accounts. Apex and others have bigger ones. And some of them allow you to have anywhere from 5 to 20 different accounts. And if 150K is your biggest, you guys can do the math on 150K times 20 accounts or 150K times 5 accounts. I don't recommend you start there. If you're starting, start with one account, right? Before you try to juggle, make sure you can handle a single account, okay? And again, our daily loss limits, these are your gotchas. These are the things that most people violate or mess up, or on their way to trying to make $1 million by tomorrow, they kind of stumble over some of the super, super basic rules that they agree to. And so again, this is our suggestion, is with a 50K account, risk no more than $250, but ideally $100 to $250. Okay. If you think about it, if I'm allowed to lose $2,000, right, and I risk $100 or $250, how much ammunition do I have? I can literally lose 20 trades over here, right? I can have 20 losing trades in a row at $100 each to hit my negative 2,000, right? Is that right? Or I can kind of make it bigger risk, and I'm only allowed to lose 8 trades at $250 each to hit my 2,000. Does that make sense? So again, before you guys, say, oh, I'm a big player, I want to go all in and make $1 million by tomorrow. Remember, if you almost hit your goal and then hit your $2,000 drawdown, you don't get to do over. You got to start back at zero. And most of them require you to pay another fee. In this case, this is kind of the math. If you're risking, if you're using $250 as risk, that is a 1R loss, or sorry, a 1R, that's your risk. And if you hit a 2R target, you're risking $250 to make $500. Or if we're to say it the other way, we're risking $100 to make $200. Or I should add a new line here. 3R would be $300 or $750. Okay. So if you have a $750 day, obviously 3 wins, you're on your way to your profit target. You're well on your way. You're not there yet, but you're well on your way. And what I did was actually looked at the Lucid Flex account. Lucid's one of my new favorites. $98. So the question is, ladies and gentlemen, if you were to use $50,000 of your own real money and you were to lose $2,000, your own money, or maybe your dad's money, if you were to lose $2,000, how much did you actually lose? You lost $2,000. Well, let's jump in a kind of a practice account, and let's only lose $98 while we're learning, right? We think that, or this is kind of our internal opinion, is that funded accounts are a great place to start. You don't have to live on funded accounts, but we have plenty of clients who are taking payouts out of funded accounts and then putting them into real money accounts, like real futures trading accounts that you can start for as little as a few $1,000s. Okay, you can get your own futures trading account for as little as a couple $1,000s. Okay, so imagine spending $98 a couple times, growing your account, getting payouts, taking $2,000, $3,000, $4,000, $5,000, $6,000, taking that out and putting into your own real money account. And now you can do both, right? You don't have to worry about whether you're going to blow up the account, right? You can have the advantages and disadvantages of both. Okay. Okay. So what would happen in you guys' trading if you weren't emotional, you weren't all over the place? Like, what would happen in your trading if the strategy was executed automatically? Like if we had technology that could actually take this exact strategy and execute it for you in your account. And we are big users of NinjaTrader, big fan of NinjaTrader. We used to be on a MetaTrader platform, MetaTrader 5. Had kind of some things blow up last year with MetaTrader, where they pretty much said, MetaTrader, the company, said we don't want any more US customers. So that was a problem if you're in the US. Not our choice, their choice. So we migrated away from MetaTrader to NinjaTrader. So then what if our system used fixed risk exactly like we're preaching here? $100 a risk, $250, like something fixed in that slow dollar amount. And then what if like the system never missed a trade? Like what if it just actually, got out there and took all the trades and it didn't sleep in, it didn't make any mistakes. It actually just executed flawlessly. And then what if you could have anywhere from 2 to 20 accounts that your trades were copied into? Apex is the only one I'm aware of, Apex Trader Funding, that offers up to 20 accounts, right? So up to 20 accounts. So in this case, like I want to explain to you a little bit of why most people, when they're trading manually, struggle. And these are the reasons. They hesitate at entry. They click late on they jump in too late, or they double down on their risk if there's a loss, or they cancel their stop loss, right? Have any of you guys ever done any of these? I want you to put a 6 in the chat pane if you've ever done any of that, if you've ever just made some mistakes, right? And again, this is the emotional side of this. This is the manual trader, right? Now, I'm more engineering brained, right? Most people who are more engineering brain kind of gravitate to our style of thinking. It's not just, I just want to buy right here or sell right here. I had a mentor one time. I asked, hey, why did you get in right there? And he gave me some smart aleck answer that was like, 15 years of experience. I'm like, well, as a new trader who doesn't have 15 years experience at that time, what do? I don't have anything, like, what do I rely on? So I learned quickly, I need some rules that I could follow. And so this is kind of the difference between the manual trading and systematic, is everything's automatic. It's basically rule-based. It's a system that you can follow. Stops are calculated exactly, and it really doesn't bring any emotions or anything from the previous day. If you guys can imagine having maybe an argument with your spouse, your partner, your loved one, and it doesn't care about what happened yesterday, no emotions, right? And so that's essentially like what the challenge is for most traders. And so what we do is we have some pre-built, actually we have some more coming, but we have some pre-built trading bots and trading systems. And we basically have automated all of these strategies. So the last few weeks, the last month or two, we've been teaching all of our strategies, and we have some more coming up. So every 2 weeks, we teach a free webinar on the strategy, the underlying strategy that each one of our trading bots executes. And the reason we do that is, you guys can see, we're just kind of transparent. We don't have any secret magic formula that's proprietary. I always giggle a little bit when I say, when I see someone talk about their proprietary strategy. Every strategy is based off of someone else's strategy, right? Obviously, you learn to trade from someone before you. Maybe you customize their strategy a little bit and then called it proprietary. But at the end of the day, that's kind of why we're doing webinars where we teach the strategy. And really, you can get value whether or not you become a customer or not. You can still learn from our webinars. These are not giant sales pitch, right? So the other thing we do is we actually took a portfolio, and you can build a portfolio of trading bots, which is pretty interesting, right? So instead of relying on a single strategy, you have a handful of strategies that are all executing. Some work certain days of the week, some work other days of the week, some work on a 7-minute chart, some work on a 12-minute chart. And what we did is we actually ran some computer modeling essentially, and we went back over 48 months, so 4 years, over 4 years, and we have systems that have taken 3, 4, 5,000 trades to determine what is the optimal time frame. So I know some of you guys have asked about that. Hey, should I do this on a 5-minute, a 15-minute? And the answer is it depends on the asset. Okay. So I don't recommend, there's no across the board setting for, always do this on every single chart, whether it's Tesla, Nvidia, if we're talking about stocks, or if you guys like ETFs like QQQ or SPY, or if you like futures like most of us, MNQ, ES, MES, GC, MGC, right? Crude oil, CL, MCL. So all of those tickers, there's not across the board, always do it this way. Okay. So what I want to do is I want to kind of walk you guys through a little bit more about how this works so that you guys can see a little bit more about like what our company does. Right. And I will tell you from experience, you guys have probably heard a lot more. This is becoming more and more popular, is the systematic trading versus just going with how you feel, which has zero consistency, right? And most brand new traders, when they start trading, they feel like if they lose on a trade, they need a new strategy, or the temptation is to tweak the strategy. Why? So they never lose ever again. Now, if you can imagine applying that same like mindset to like pro sports, like the NFL, like the National Football League in the US, you can imagine every time a team loses, they have to go back to the drawing board and figure out how to never lose ever again. That would be ridiculous, right? And at the end of that would be a lot of frustration and heartache. Why? Because you're not going to always bring your A game every single time. It's not possible. And it also means someone might just been a little bit better better than you at that moment. Doesn't mean your strategies are bad. It just means that maybe someone brought their A game and you weren't on your A game. Maybe you're getting over something, right? So the idea here is that these are becoming more and more and more popular with these larger companies and hedge funds, CTAs, managed future funds, quant funds. Someone asked, what the heck is a quant fund? It's basically a hedge fund, 100% managed by computer algorithms, quantitative fund, right? So here's the question is, why does this matter? And what are we doing here? What do we offer? And we basically bring like this whole thing, this idea of systematic trading, bot portfolios. We're kind of bringing this to the forefront for individual investors. Okay. Now, why does this matter? Why do I need more than one bot? Matt, just give me one. I don't need more than one. Is actually, you guys have probably seen in the last year or 2 or 3, sometimes the markets are screaming higher. Sometimes they're going sideways. Sometimes they're going lower, right? And so one strategy can't possibly work in every single environment. Just like you can't wear long sleeves in cold and warm weather, you have to have different things for different time frames, different things for different seasons, right? Whether the market is just rocking higher like it has been for a few years, whether it's sideways or down like it currently is, or whether you guys remember what happened in 2022, like tech stocks were down 60, 70, 80%. It was just a bloodbath, right? So again, the same strategy can't work in all these different environments. So the different environments are basically trending, range bound, high volatility, low volatility, right? So trending is like severe up or severe down, right? We're kind of like this right now, just kind of a little bit up, a little bit down for 2026, right? That's kind of the idea. And so high and low volatility just denotes the what I would refer to as like the excitement factor, whether things are just screaming higher, screaming lower. If you guys have ever been to a live sports game, football, basketball, baseball, when your team scores a point or multiple points, that energy, that's kind of the excitement factor. That's kind of what volatility is. And it basically just means high or low fear, high or low excitement, right? And so our idea here is we took this approach of what if we didn't have to rely on any one single strategy? We had, let's say, a handful of strategies. What would that do for us? And it basically like smooth out the performance, and then they could work in different, changing market conditions, right? And so ultimately what we want to do is we want to be able to provide some specific things and for you guys. And in this case, we'll talk about some of this in a little bit more in a minute. But ultimately, if you guys can imagine like rule-based execution, multiple accounts, defined specific risk, and then tracking your performance over time. And so we've kind of automated a lot of this. And I want you guys to think about this is for us, at least, the education is like when we provide education like this webinar, like some of our training, that's kind of what provides the edge, but it's really up to you to implement. And then we also provide technology that protects the edge, if that makes sense, right? So the things about trading automation doesn't solve all your problems, but it can solve some of the human problems, some of the emotional problems. And so that's the idea here. And so, again, what we offer is a structured rule-based trading system. We remove the emotional stuff. I don't know, how many of you guys, the emotions is really what gets you? The emotions or the extreme, maybe you're afraid, maybe you're excited, right? And so the idea here is we're going to remove all that, and then that's super important, and that is by itself really changes everything. So again, most traders don't struggle because they lack knowledge. How many of you guys have learned dozens of strategies and you're still struggling? How many of you guys can say, yeah, that's me. I've learned dozens and I'm still struggling. It's not because of knowledge. It's because of structure, a lack of structure, right? What happens? Well, you end up reacting, you end up second guessing, and then you end up ultimately like overriding your own strategy. Just like I said, imagine the NFL, every time they have a losing game, they want to retool every play, like start all over, go back to the drawing board. And that's the temptation for most brand new traders, right? That's the idea. And so again, what we do is we offer some automation. There's three main things here: discipline, speed, and consistency, right? So the idea here is that it's really about a systematic portfolio of strategies, right? Instead of, this is what most people do, rely on your own judgment and say, oh, I think I'll buy here. One guy said, Matt, what do I do? My account's down huge. And never talked to this person before. And I said, well, what made you want to buy at that level? And he said, because I knew it was going up. And I said, how did you know it was going up? And he said, well, I heard it on the news. I'm like, they can't predict. No one can predict, right? Again, you have to use judgment. And if you're a brand new trader, what is your judgment based on? It's based on not much. Again, this is not just one trading bot that we have. It's actually 8, and we have almost 400 now, different trading bots and tons of possible combinations. So if you guys have ever looked at any like trading bots, you'll see that they're all over the place. Price wise, and again, 8 bots, over 350 strategies, and we take this portfolio approach. So does this sound like this might be something that would fit what you guys are looking for? Some of you guys are probably looking for something like this for a while, and this is kind of what we offer. So what I'm gonna do is I'm kind of give you guys the kind of the training and the option here is we actually have a full workshop. It's not it's not live, but it's pre-recorded, self-paced videos, and it takes we have about 4.5 hours. So if you guys have about 4.5 hours over the next month of some time to run through the videos, it's pretty simple. Again, 30 days access. This is not like a throttled trial. This is a full experience to all the technology we have, and you're able to do this. and it works with funded accounts, and it does work on NinjaTrader 8. So again, no big commitment, no leap of faith. This is what we're offering. If you are interested in this workshop, we typically set it up for $299. And for you guys here on this webinar, we have it kind of set up at just $199. So I'm curious if any of you guys would be interested in kind of doing this kind of bot trading workshop. Let me know. I'm going to go ahead and throw this into the link into the group if you're interested in joining it. Again, it is only $199. So this is not a throttled, test drive of the car that the car only goes over 30 miles an hour. This is everything, right? The only thing we have a separate community that we put all of our members in, but this has a little bit separate community for people just starting. And what really we're looking for is just 20 people who are serious. That's it. And we're looking just for a max of 20 people. And that's it. I can tell on our call here, we have way more than 20 people that's registered for this webinar. Hundreds actually have registered for this. So that's kind of what we're offering. And again, it's not a big sales pitch. If you're interested, great. If this kind of fits what you're looking for, then great. Again, this removes the emotions and includes pretty much everything we have here. The only thing I have left is to see if you guys have any questions. Like, what do you guys have for questions? We've been doing this for many, many years now. But I'm curious if you guys have any specific questions. Otherwise, here is our website, pushbuttontrading.co. My email, again, Matt DeLong here. If you have some questions, I always get a couple of these after every one of these webinars. We respond to them personally. Matt@pushbuttontrading.co. And then if you're interested in joining any of our free webinars, we actually have a schedule of these. We do these almost every other week. We have some webinars if you guys are interested as well. But that's what I have for you guys. Any questions, go ahead and throw it in the chat pane, and I'm going to see if I missed anything. There we go. And sorry, one sec. Been training webinars. Yeah, so we haven't figured out the pricing, honestly, after we've tried a whole bunch of things, and it's not expensive. Again, we're building this for retail traders. We haven't figured that out yet, what we want to offer this afterwards. We've had a whole bunch of different pricing models, but it's going to be very, very affordable. We'll just say it that way. It's not $5 though, right? Like, this is some significant software. If you can imagine building 8 different trading bots and then tools that automate all of them and can mix and match hundreds and hundreds of settings, it's not a cheap thing for us to do. So we don't make tons of money off of it. But, well, we kind of break even on the technology part, but that's the idea. Yeah, so it'll be very affordable. Yep. And it's a monthly fee. Yep. It's very reasonable. Yep. So any other questions? Let me see. Did I miss any questions? Let's see. I saw a couple pop up. Thank you for answering those for me, Tracy. Any other questions, ladies and gentlemen? Again, we're just looking for 20. I think we've had a few already sign up here. So just looking for 20 people who are serious. Yep. Any splits regarding your company? I'm not sure what that means. Chloe, can I use it for FTMO funded? I haven't heard of that, but as long as this works on NinjaTrader, some funded accounts are tied to NinjaTrader, some are tied to MetaTrader. As long as it works on NinjaTrader, that's the requirement, right? Yep. Splits or commissions by using your bots. I don't know what that means. Splits or commissions. Like, we don't get commissions by using, I'm not sure what that means. Use whatever broker you want, right? So I'm not sure what that means. Yep. As long as it works with NinjaTrader. Yep. Or funded account program. Any other indicators we should look into? Darnell, the one that I shared was the one that I built specifically for this strategy. If you look at my profile page on TradingView, you'll see there's probably like 40 that I've built over the years that are free to use. This strategy, that's kind of the only one that we're referring to yet. Yep. Yep. Cool. All right, ladies and gentlemen. Well, that's what I have for you guys. Thanks so much for hanging out with us. Appreciate it. If you have any more questions, go ahead and email me here, matt@pushbuttontrading.co. Got a handful of people signed up already. So thank you guys so much. And we'll post this recording here shortly. Thanks for hanging out. Have a good day.